thank you very, very much for that really nice introduction, and I really appreciate everybody for coming out this afternoon to listen to listen to this talk. Just a little bit about myself. I'm a graduate of the University of Pennsylvania and a former professor at Jefferson University in Philadelphia, PA. I've been involved in the financial markets for over 20 years. I began trading the futures and forex markets about 10 years ago. For my thesis, I looked at the optimization of software systems via mathematical modeling, and for the last 10 years I've been working on multivariable equations that help describe the movement of the futures and stock market, and that really is the basis for the foundation of the company, rightlinetrading.com. I just want to move through these slides here. Now, there are a number of different underlying basic strategies that software developers take when they develop a program to define market movement. You can either believe that price action alone provides you with enough information to trigger a buy or a sell recommendation that provides you with a positive predictive value high enough to make you a profitable trader. Others believe that indicator analysis is the key, and that simply a unique composition of indicator signals, some confluence of indicator signals that trigger a buy or a sell recommendation. Essentially, these are the guys who believe that a green dot long signal and a red dot short signal based on indicator analysis has the positive predictive value high enough for also making you a profitable trader. And a further subdivision of those are those that believe that a single time frame gives you the power, the predictive power to create a profitable entry, or multiple time frames are required. And at Rightline, we sort of reject all of these hypotheses. We believe that price action alone does not provide you with low risk, high predictive value entries, especially does any confluence of indicator signals. In fact, we believe that price action provides you with about 85% of the information that's required to take a successful trade, and that indicator analysis helps confirm what you see via the use of price action, but that you need both. Now, if either one or two were correct, then basically the market could be robot traded for millions in profit. In fact, what it requires is both. And what you have to do is to break down price action and indicator analysis, again, into a multivariable equation where you optimize each of the independent variables. In this case, we have many independent variables, but we know what we want for the multivariable equation to contain, both price action parameters and indicator confluence parameters together. So the goal of right line trading is to combine primarily market structure, also indicator analysis, and third, fractal analysis. Now, fractal analysis is multi-time frame analysis, and we want all of our indicators to synthesize data from multiple time frames. and do that in a simple trading platform that's been optimized mathematically to provide you with remarkably accurate trading entries. Now, the thing is that I've been in, excuse me if I'm a little bit hoarse, but I actually went to the doctor today, and I'm just getting over a really bad case of bronchitis. So I have a little bit of a frog in my throat. So you may hear that, and you may hear my voice breaking a little bit. But essentially, what you want to do is I'm going to move to the next slide. Further define your methodology. And first, we don't call tops or bottoms. Secondly, we don't trade reversals. We don't counter trend trade. We do not try and predict breakouts. And we are trend traders only. We believe that institutional traders set the trend, and we want to be on board with them. And it's our goal to define a trend early and get on board fast. Now, the thing about our platform, and I've been in many webinars and asked many software developers, is what is the sensitivity and what is the specificity of the different parameters they use to base their trading entries on. And I very rarely got an answer. Now, if you trade with a lot of sensitivity, you're going to try to get in on every single move, but the cost is that you're going to get stepped out a lot. If you trade with a lot of specificity, you're only going to get in on very well-defined moves, and the cost is that you're going to miss some big market moves that really go quite a bit of distance. Sensitivity over specificity equals positive predictive value, and that's really the key number that we want to optimize. And that's actually multiplied by prevalence to give you the positive predictive value. Now, if you look at this slide, this is a slide of just price action. And if you can see my cursor, I don't think you can see it. Hold on one sec here. Well, if you look at the candle, okay, if you look at this green candle here, you get a move to the upside, and then almost a 100% retracement back. Price begins to rise on an engulfing candle, and our entry would be right here based on price action and a move to the upside. And this candle right here is called a dark cloud cover, and this initiates a short trade right off of a double top. That occurs right here, and then we move to the bottom. Now, the problem here now is we don't have a 70% or greater retracement, and we move into an area of chop, but here we get it. We go from here up to here. We get about a double top, an engulfing candle, and then this big move to the downside. So price action does give you a tremendous amount of information, but we just do not believe that price action alone provides you with enough information in order to take consistently profitable trades. And I just want you to know, in the live trading room that we have that every morning, in our last 7 trading sessions, we have had 6 perfect sessions. I have either had 2 winners and no losers, 3 winners and no losers, or 4 winners and no losers. This week, we have taken no losers. We have 5 trades and we have 5 winners. So by trading with a tremendous amount of specificity, we don't get a lot of trades, which is good, but when we take one, the predictive value that the trade is going to be successful is extraordinarily high, and that's what gets you to become a profitable day trader. But like I said, price action alone is just not enough. So what we do is we break the chart into into two halves. Above the line, and this is just an SMA 50, a 50 period simple moving average, is our buy zone. When the market is above the 50, we believe that the bulls are in control and we only go long. When we're below the 50, we believe that the bears are in control and we only go short. Now we further increase specificity by now creating two rules. And that one is we want the 50 and our proprietary 15 period moving average to both be heading down for a short. So both be red or both be green for a long. So with each rule, we put constraints upon the type of trades we can take, and we increase specificity. Then we add pivots, and we don't trade into unbroken pivots. So now we have further defined price action and market structure, further increased specificity by further defining market structure. Now, one of the other variables that we found that really significantly impacts the predictive value of a trade is how far the candle body is off of support or resistance. So what we've done is we've created an indicator that tells you that on this trade right here, this candle body 7 ticks off of this trend line. Now we want the trend line, we want the candle to be only 4 ticks or less off the trend line. This prevents the move from retracing right back to the trend line, stopping you out and then moving up. We want to trade very, very tight to our trend lines, and this indicator keeps us that way. And what we look at, we do not look at any analysis, either order flow, stochastic, or momentum on one time frame. And the biggest kind of, it's sort of a canard, is to look at any indicator after the market closes on a dead chart, like a stochastic, for instance, and look at a stochastic that is simply moved by price action on the chart. Now, when price goes up, the stochastic goes up. When price goes down, the stochastic goes down. All of these indicators are driven by the price action of your trading chart. And I have found that the predictive value of those type of indicator analyses is 0. They simply don't predict anything. And people always talk about lagging indicators. Well, that's your quintessential lagging indicator, an indicator that simply does an analysis of price on your trading chart and creates a line. So what we do is we have it's called the 3-line indicator. Now the 3-line has actually been removed from the chart for ease, and I'll show you later how that's done. But line 1 analyzes order flow, whether or not there's more executed buys or executed sells on multiple time frames. And when it's red, order flow is to the downside on multiple time frames. And when it's green, it's to the upside on multiple time frames. Same thing with stochastic direction. Down multiple time frames, up multiple. And momentum defined as a MACD. So as I said, if the line is red, we're good to go, down on all time frames. If it's green, we're good to go, up on all time frames. And the power of the analysis comes with the fact that the line changes color based on the input of data from multiple higher time frames. And let me show you an example. What we do is we project the results of the 3 line onto the candle. And this next candle is going to be easier. You can see that how the candle has a 2/3 close above our 50 period SMA. Right here. Now you're going to see this outline intra-bar. When you see it, you're going to place your buy stop order 1 tick above the close of the candle because you've got your perfect trend trade. You've got order flow, stochastic, and momentum, green on multiple time frames. They project that data onto the price bar, and it's surrounded in blue. The candle breaks the 50. The 15 has got to be up. The 50's got to be up. So we know that we're taking a trend trade. You're in 1 tick above the close of the candle, and up you go. Same thing to the downside. Now the candle's outlined in yellow, which occurs intra-bar. Order flow, stochastic, and momentum are to the downside on multiple time frames. The 15 is red. The 50 is red. Our short is placed 1 tick below the close of the down candle, and down we go. Now here we have the same thing with a break of the 15. We break the modified 15, the candle's outlined in yellow, and we have a perfect short trade. Here we have a break of the 50. We can't take the trade until the 50 and the 15 are green. Candles outlined in blue, order flow momentum to the upside, and we have our long trade. Now this is a signal based on market structure. We have a move to the downside, and then we have a retracement, and essentially we are retracement traders. And we have the 50 and the 15 both to the downside. Now what people try to do all the time, and what we try to exploit at Right Line, is create a turn of the market to counter trend trade. So the market is heading down. Now the software creates the A and the B and the C. I didn't put those in. Anytime 2 candles in a row of the same color occur, we have a trend. So the A prints when 2 candles in a row are red. Then the market continues down. And then when somebody tries to turn the market and we get an up candle, in a downtrend, we get a B. And the B will flash and print, and you get an audible alert. Then the B tells you that there's the potential for a C. A C is an engulfing candle. And when sellers flock back into the market, overrun the buyers in B. Now remember, everybody in the C candle is trend trading. Everybody in the B candle is counter trend trading. Everyone in the C candle is simply moving the market along in the same direction it was going. The people in the B candle are trying to call a bottom and move the market to the upside. So once the C candle ticks in, which is 1 tick below the close, the market is propelled down by 2 forces. One is the addition of new sellers. The other is the stop out of all of the traders who are in this failed counter trend move. So the C candles are exceedingly powerful because they're pushed down by 2 forces, and they're market structure trades. Here's another example of a C. There's the move to the downside. The counter trend B fails with an engulfing C. We're in 1 tick below the close, and we take the trade to the downside. Another example of a move to the downside, a retracement, a move to the downside, a counter trend B, a C that engulfs it, and a continued move to the downside. These are both breaks of the 50 and the 15, retracement and a continuation trade to the upside. Candles outlined in blue tells you that order flow and momentum are with you to the upside. Continued up, retracement, continuation trade. Remember, we're running over the people in these failed counter trend moves. The X is a momentum entry, and that tells you that momentum is aligned on more time frames, even greater time frames than we use on the 3-line indicator. The bottom line, though, is that what we're doing on all this analysis is we're trend trading. We're taking retracements based on failed counter trend calls of people trying to call a top or a bottom. We're trading into the trend with order flow momentum and stochastic in our direction, and in the case where we have the X, momentum with us on even more time frames. And here's a momentum signal to the downside. The candle doesn't quite engulf. This is called a dark cloud cover. It's a very, very bearish candle. It starts higher than the previous candle. The body works over 1/2 into the body of the previous candle, triggered by a momentum signal and a move to the downside. Same thing to the upside. The break, the retracement, the continuation with the trend, with order flow stochastic and momentum. What I'd like to do right now is move over to our actual trading chart. So hang on 1 second, we're going to do that now. Okay, and what we have here is our actual workspace. And it's our crude workspace. And I want to show you how we leverage multi-time frame analysis and how we leverage market structure to provide us with really entries that have a positive predictive value of close to 90%. And I want to tell you, now today I was not in the trading room for the first time in many, many months because of my cold. And I was at the doctor. So I'm scrolling back to the trades that we took yesterday. And I sure hope they're still on the chart. They should be. Well, I don't see them. Here we go. Here they are. The first trade that I took was this trade. Now, I'm going to take some of this off. Now remember, any indicator that does an assessment of price action from the trading chart really has no predictive value whatsoever. The background color is an assessment of price action, market structure, and the direction of the 50 and the 15 on 2 higher time frames. So when you have this dark pink, you know that you're not only taking a short trade on your trading chart, the 50 and the 15 are down, but you're trading into the direction of the 2 higher time frames. That provides you with a tremendous amount of an advantage when taking a trade. And I want to take a lot of these markings off. So all I did was do exactly what I showed you in the chart. Now, we have a market profile that does a multi-day analysis, but we had a move to the downside, and then we had a retracement right back to resistance. And it occurred in an area of consolidation. And you can see the candle is outlined in red. That tells you that order flow, stochastic, and momentum are with you to the downside. And if you look below, what we've done in addition is these are correlative markets. And we have found 3 correlative markets that either move in the direction of crude or in the opposite direction of crude 70% of the time or greater. So when that line is red, it provides you with an additional verification that this trade is going to move to the downside. Given all of that, I went short at the close of the candle, and the trade went down 21 ticks. That was our first trade. Then, the second trade was simply a break of the 50 and a retest of the 50. Just that simple. The correlative markets in real time were with me. This line was green. The candles outlined in order flow and momentum. The 15 is crossing the 50 to the upside. We were in 1 tick above the close of the candle, and we had 16 ticks, and we were done. And we made over $550 on 2 trades, trading 3 contracts. That was it. And so we were trading for all of 15 minutes. That was the total end of our day. And if we go through the chart, we see that there's slightly more complex trades, but here's a break and a retest. Here's the triangle, which is our consolidation indicator that occurs intra-candle, and this was another short. You see, here's how we did. 2 trades, 2 winners. Net ticks 37, and net equity was $550. And then I'll show you the day before. I don't know how many trades we had on crude the day before. I just can't remember. Now, it's not that we haven't had a losing day in a long time. We haven't had a losing trade in a long time. Here were my 2 trades I took. Now, I missed this trade here. I didn't take it because the 50 was heading up. And we didn't have any background bias. I waited for the 50 to turn red. The 15 to turn red. Then we had the move down, the retracement back, and we were down for 6. First target's 5. Then we retraced back, and down we went for 15. And then we had another winner on the E-mini S&P. Well, you can see how we leverage the multi-time frame analysis. This trend, this color is also a very powerful background color. It tells you that the 50 and the 15 are down on multiple higher time frames. Both candle entries were C candles, and they both were outlined in red. Order flow and momentum were with you on multiple time frames, and down you went for 2 more winners. So we had 4 trades on crude this week, and we had 4 winners, and we stop. If we have close to $500 on 2 trades in the morning, we just call it. But afterwards, we do get multiple other signals, and we get multiple other winners. This was a terrific long trade right here. Whoops, pressing the wrong button. But here was, whoops, great long trade right here. You can see the consolidative pattern. You can see the break, the retracement, and the continuation. Very, very high probability winner. And there's your C. Break, retracement, 15's up, 50's up, and up you go. If you get stopped out here, you're in again. to the upside. So we get multiple winners, but we don't push over $500, especially when we get that on 2 winners. Now, I'm just going to move the E-mini S&P chart in front of you quickly and show you that. Here's the E-mini S&P. Now, the fact that we have a lot of colors, I don't want that to be daunting to you. Let me just reset the chart. It's because it's really a very, very simple system. Just give it 1 second to reload. But we trade it. We understand the variables that are required to take a successful trade, and we leverage that information by projecting that onto our workspace. We really, on the workspace, are working on many, many time frames. We don't believe one time frame is enough, and it's very difficult to watch not only more than one market, like 2 or 3, like we do in the trading room. In fact, we watch 3. We watch bonds, the E-mini, and we watch crude, and at the same time, watch multiple time frames on multiple markets. So the easiest thing to do is to have your workspace assimilate data from multiple time frames. That really takes a huge amount of the heavy lifting off of your shoulders. This is taking a little bit of time to reload. Just give it 1 more minute. It should come back. It's probably because the E-mini had so many candles recently. There we go. Okay, here's the E-mini. And what I'm going to do is, now the workspace is still locked. I'm going to give it 1 more second here. Here we go. Whoops, I think I lost the chart. Here it is. Now, this is the E-mini. We trade a 5 range. And I'm just going to, what I want to do is I want to show you my live trades. I mean, a lot of people go in and in retrospect show you setups, and that's all well and good. But I think that what's more important is what you trade when you're hanging on that right edge, which is one of the toughest places to be, I think, in any set of circumstances, is when do you pull the trigger and when do you take a trade? And that's really what I'm showing you here. When I pull the trigger in front of all our traders in the live trading room and called a trade. Now there's so many candles, I'm sorry for all the scrolling, but I want to show you a real chart and not just a JPEG. And we're getting there. Because we have some enormous winners on the E-mini by looking at multi-time frame analysis and by respecting market structure, first and foremost. And I can see some huge ones going by. And a lot of this is, I do a little bit of teaching after the trading room is done, especially, and I mean, this week it's taken us 15 minutes a session to make $500. So I think we're heading to a morning now. All right, here's the first trade I took. It was a very, very small winner, and actually a little bit of a dangerous trade, but it was the move up. It was a retracement, and what made it dangerous was that it moved into the value area high of our market profile. I usually don't do that, but I did it this time, and we were a little bit off of support, but the trade went 3. That's our first target. That's not a big trade. Now the quant lines here that look at our correlative markets, we have 9 markets we assess on the E-mini. 6 of those markets were moving to the upside. The third line was flat, and I elected to take the trade. Background bias was blue. That's not a strong background color for multi-time frame analysis, a trend, and it only gave me 3 ticks. But I took a trade here, so move to the downside, a really nice retracement. You can see that the 50 is either red or it's yellow. Confirmed downtrend. We went down for just under 2 points. These were trades that I really took. Now, there are multiple other great setups. And let me just go back one more day. I don't want to torture you with this. And then I'm going to show you a couple of things about market structure. Here was another trade that I took. This is on, what day was this? This is on the 27th. Move to the upside, the retracement, and we moved up for 10 ticks, 2.5 points. The move up, move down, the retracement, and the move down for just under 1 point, 1.25 points. So you can see we just keep taking winner after winner just by very conservatively trading with the trend, taking conservative retracements, trading in the direction of order flow, stochastic, and momentum on multiple time frames, and trading in the direction of the trend on multiple time frames as defined by our background color. And really, once you spend a little bit of time on the workspace, it becomes very, very easy. Here's an unbelievable trade. And you can see it signaled twice, and they're both winners. Now we look for consolidation, and we have what's called the Consolidation Indicator. And I want to show you something. I'm going to remove a lot of indicators from the chart. Now, when I do a mentorship, I really spend most of my time teaching price action and market structure because they're so critical to understanding how to trade the market. All right, I want to take off the background color. Okay, and the only thing that we have on the chart now are the 50, the 15, and our consolidation indicator. And if we move through the chart, we're going to see I want to just show you some really great examples of trades based purely on, and this is a day where we had 4 trades and 4 winners, and we made $450. I don't know exactly which day that was. But here's a great trade. There's our move to the upside. There's our retracement. There's the 50. There's the 15. And up we go. Now, this is just based on price action, market structure, and the fact that we guarantee that we're trading with the trend. Now, the other thing about this trade, which is really important, and which I teach everyone, this one really doesn't work out that way. But actually it does, because here's a pivot right here. Actually, the pivot is here. No, it really does not. Here's another perfect trade. And they come up over and over again. Move to the downside. The retracement, the continuation, move continuation to the downside. Another one, move to the upside, retracement, continuation to the upside. Always trading with the trend. I wanted to show you just a couple of other trades. That was when you want to find them. If you have a little bit more difficulty, here's a pivot right here. Then get a move down, and you get a retracement. Now, this one's not quite, it's not really 70%. What I want to show you is a very, very high probability winners. Here's a move up, test of the 50, and this is an early retracement in the trend and an easy move up. Retracement right back to support and a move to the upside. And I want to find some nice trades out of consolidation for you to show you how much the market is driven by structure. And always when I look, here's a trade. See this signal? It shows that price is consolidated. You can see the red line here. You can see the blue line here. And you can see this signal occurs intra-candle. You'd be short right here out of consolidation, and you get a really big move to the downside. We trade consolidation a lot, and they're very, very, very safe trades. And I hope I'm not throwing up too much at you. Now here is your perfect bottom right off of the 50. The market comes up. And here's the key. You have your move up, and then you have the retracement 100% all the way back. And it initiates only 2 ticks off support with an engulfing candle. And there's a long. Here's a break and a retest of the 50 and the move down with the proprietary 15. And when you learn to read market structure, you're going to see multiple winners like this. So when we start adding back our fractal indicators, they simply filter out some of the trades based on market structure. And I can tell you, they're very, very few. And the reason this is frozen, it's just 4 o'clock. And all I'm going to do is let me just add the template back. So I'm going to be finished very, very shortly. Hold on 1 second. I'm going to lose the indicator here. I'm just going to wait for this to respond. Because what I want to do is just quickly, here we go. Just let me just add back the template. What I'll do is I'll just put the ES back. And then when we put market structure in a little more context of the multi-time frame analysis of our indicators and the background bias of multi-time frame direction, we really have a great feel for when we're going to get a successful short trade or a successful long trade. Nothing on this chart is there that we don't exploit to create a more specific trade that has a higher predictive value of being successful. Now, I think that it is impossible to take a chart, or is it worthwhile in any way to look at an indicator that synthesizes data from the time frame that you're looking at? Those indicators do not work, and we've looked at these in a year of market replay data. They just have no predictive value whatsoever. So what we look at on our trading chart is unaffected by price action on the chart. Like the reason this market falls here is the reason this background is red is not because this market falls here. The market falls because the background is red. The background is red because higher time frames, 50, 15, market structure, price action, support, resistance, they're all to the downside. It shows the predictive value alone of the background color. When all the correlative markets are red, the markets that go down with the S&P, or all the markets that go up with the E-mini S&P are green. These lines are not influenced in any way by price action on the chart. That's what makes these so valuable. Nothing on our trading chart is influenced by the price and movement by price and movement on our chart. They're all independent predictors of an entry, and they're not linked to price movement on the chart itself. So let me just go back to the, now, I mean, this workspace has gone through a huge evolutionary process for us to get it to this point where we can trade 10 wins and 1 loss, 9 wins and 1 loss, 8 wins and 1 loss, but we do it with regularity. And what I want to do is I want to put up our website and show you our performance. Just hang on 1 second, I'm going to do that. Now, we're one of the few people, I mean, I make a video. I want to put up our website, Leo. Yeah. Who actually calculated net equity every single day and posted on our website. Now, it's not the number of ticks. It's not the amount of potential profit. It's what we actually made. And you can get that just by going right here. And we're going to put it right here. You can see on 8/28, we had 2 wins and no losses, and we made $550. We closed out August with $5,450.50 worth of profit. This is not including commissions. On the 31st, I had 3 wins and no losses. On the 28th, I had 4 wins and no losses. On the 27th, I had 4 wins and no losses. On the 26th, I had a lot of trouble. I had 9 wins and 6 losses, but still made $402.50. Day before, 3 wins and no losses. Day before that, 2 wins and no losses. So we trade with an enormous amount of specificity. And it's really all based on the fact that we do multi-time frame analysis. I mean, this is the website. And what we'd like to do is, if I just can slide down here, and I'm going to move back to the slides. I'm really sorry moving back and forth, but this is really going to close, and I'll see if I can take any questions, if anybody would like to ask any. All right, let me just move through the slides here really quickly. Now, really, what do you need to become a professional day trader? It doesn't matter what you're trading. We're very soon going to be opening up a stock day trading room and a Forex day trading room. It doesn't matter what the instrument is. All the rules that we use, the multivariable analysis of the movement of price is applicable to any instrument on any market. you do need outstanding software, and you do have to understand how to trade price action and market structure, because we have to outfight the smartest and in many cases some of the richest people in the world, which are the institutional traders. They use very sophisticated trading systems. They're the very high rapid systems. Those are people who trade the binary options with huge amounts of volume. And essentially, we have to take money out of their hands. And you really can only do this with software that really provides you with an edge. I mean, remember, the money that we take home is someone else's money. I mean, it really is a dogfight every day when we go into the market. And really, education is a huge component of right line trading. We provide you with an extensive amount of videos and group and personal mentorship programs. And we really support our software. We want to get you to the point where you can read market structure and price action as well as I can and trade with the kind of precision or predictive value that I do and pull from the market every day. I mean, our goal is $1,000 a week, clear of commissions, so that with the small number of contracts at $1,000 a week, you'll make $50,000 a year. It doesn't take a lot of winners. It just takes a huge amount of consistency. And we, as part of our company policy, we never ask you to pay for boot camps. And our seminars and lectures are free. The big thing too is we really work hard on a workspace. We create free we upgrade to new indicators. We always give those out for free too. We never create a 2.0 version of our software and then ask you to pay more. Once you become a member of our family, we consider you really to be a member of our family. We don't ask you for any more money. And for the special for this webinar is that the software with the video tutorials and the webinars, we're going to give you a special price. The normal price is $39.99, is $34.99, and we'll give you the ability to pay in installments. Now we'll put that link on the website just for the next 48 hours. You're more than welcome to call us. Hopefully I have our phone number on here. It's 1-855-765-6681. But everything's on rightlinetrading.com. Our phone number, our contact us page, all the information that you need to reach us. And honestly, that's a really, really nice special. We very, very rarely give anyone the ability to pay off, once at a time, a trade at a time. Thank you, Robin. So does anybody have any questions they'd like to ask? Any questions? I think I see one there. It's up top there.
Yeah, Mark, are you able to see the questions box? We have quite a few for you.
I can't see them for some reason. Let me see if I can open the window a little bit more. Okay, I got them.
Okay, great.
Scroll to the top, Leo. Okay. All right, let me just scroll down. All right, Phil, what's that? Oh, okay, I'm sorry. I'm looking at the questions from all the way early in the morning. Let me just scroll all the way down here.
Yeah, I think your first question was at 3:26 p.m. by SD Bashnu.
Okay, thank you. 3:26 p.m., Leo. This is our first. All right, we're almost there. Okay, we got it. Do you use simple, not exponential? What we do is, JM, we use a 50 period simple, and the 15 that we use is a proprietary moving average. It's not an exponential or a simple, and if you overlay a 15 period simple or exponential, you'll see they crisscross. So the proprietary 15 is neither simple nor exponential. The 50 is just as simple. Larry, I am the only one calling the trades. But right now we have 2 people in training. Oh, okay. Larry asks, are you the only one in the trading room calling trades? Right now I am. But we are training someone to take over and open a stock day trading room, and somebody to take over or to open a forex trading room. And then we'll do that. Then there'll be myself and 2 other people. Yeah, and LJ T Master says the software prints the ABC, and yes, it does. It prints the A, then the B, and then flashes the C. If the C is successful, the C prints, you have the ABC, get an audible alert, and you're in. Where do you put your stop loss, JM? That's a great question. We put it 1 tick above the candle on a short, 1 tick below the candle on a long. If we're trading an 8 range, we have a 10 tick stop. The stop is 1 tick above on a long, 1 tick below, on a short, 1 tick above. If we trade a 5 range, we have a 7 tick stop, and we trade bonds on a 3 range, so we have a 5 tick stop. How do you decide where to put the target? JM, that's another great question. Our ATM and targets are based on a year of analysis of market movement. Our first target on crude is 5 ticks, our second target on crude is 10, and our third target on crude is 30. Our first target on the ES is 3, second target is 4, our third target is 11 ticks. And really what we've done is we've optimized scaling out of a trade via the use of a year of market replay data and analyzing multiple ATMs to see which one provides us with the highest equity curve. And that's how we determine to where to put our targets. Larry, can your software be applied to any? Absolutely, Larry. I trade the Forex at night. I trade the euro dollar, the euro pound, and the euro yen. It works absolutely great on a 5 range chart. Does this work on daily charts for stocks and ETFs? Absolutely. In fact, I have an options newsletter, and that options newsletter is doing extremely well because, and this has been a brutal market to trade options, because it just chews options up. When it goes up 500 points and down 500 points, we have a really exemplary options portfolio. I base that all on daily charts, determining which stocks we're going to trade options on. Do you apply your strategy to Forex? Use a lot of what you say. Yes, I mean, the Forex is a great market. We're soon going to be opening a Forex room. I should have put up some Forex charts. We use the 5 range. No, we use the 5 range on the ES. If you come aboard, it's no secret. We'll tell you. We have 35 markets, and we'll tell you the size of the range bar that we recommend. The 6E, the ES, the grains, many are 5 range. The Russell. Crude, gold, those are 8 range. Have you had any losing weeks, months, or days? We've never had a losing month since the inception of the company. We most certainly have had a losing day. If you don't have a losing day, it means that there's something wrong. You definitely are going to have a losing day. I don't believe we've ever had a losing week. I don't think so. I mean, honestly, I'd have to go back and look, but I don't believe we've ever had a losing week, although we definitely have had a losing day. You know, I think we've had 1 or 2 losing weeks in the past 2 years. And Mark Burrell says, and Mark, I thank you so much. He writes, I'm in Mark's room daily. You have to come in to see him in action. No smoke and mirrors, very upfront and making money daily. Steve, what is the fee for the trading room? It's $249 a month, Steve. To use multiple targets, JM, I do. and I already outlined them on the website. It's a little hard to see, but if you go to the tab that says Trading Room, and then there's another link that says ATMs, and you click that, it's going to show you all of our ATM strategies for the markets that we trade, the ES, bonds, and crude oil. So listen, I really, really thank you for attending. Hold on one sec here. I really, really appreciate it. Oh, I'm sorry. I call the trades way in advance in the trading room, Gary. And the fact is, if I don't call a trade far enough in advance and anyone complains in the room, I don't book the trade. I don't care if it goes 150 ticks and some people get it. We don't even mark it in the trading room as a winner. It's got to be a call where everybody can get in on the trade. And I'm usually way, way ahead on that. This webinar, Dan? No, so we didn't have a chance to record it. I apologize. But we can direct you. If you give us a call, we can send you links to many, many, many videos. I have almost 300 videos on YouTube just under Right Line Trading. Opening hours of the trade room.
We are recording it for our site. We are going to.
Thank you so much.
Yeah.
Just go to this. Just go to just go to the site here, and it's going to be posted for you. And I recommend you just use the site here. Opening hours, we start trading at 8:45. They are complete. 100% of the trades, Jam, are discretionary. I take them, I call them. 10 to 15% component of every trade is discretionary. And we do have 2 auto traders we're going to be putting back online. We just integrated, because we just put the Correlative Markets Indicator and Market Profile in. We've just integrated them into the trading algorithm of our auto traders. Our auto traders ran up a really, really nice record. We wanted them to do better, so we've added those into the algorithm. They're going to get fewer trades, but the percentage of trades they take are going to be a higher winning percentage. So I welcome everybody in the room. Listen, all of this stuff is expensive, and I really respect your money. Come into the room and see how we trade. If my performance is as good as I say it is, maybe you'll be interested. If my performance isn't, then I don't expect anybody to buy. I want you to buy from someone who proffers you the truth about their software and about their trading performance. So go to rightlinetrading.com, come on in for a free trial, then come on right back here, and if you're interested, I think we have a buy link here, and we're good to go. So I really thank everyone so much, really, for the time. And Robin, thank you so much for having me. I really, really appreciate it. The free trial is 3 days. If you're dying for a 4th, we'll give it to you. But if I go 3 days and I don't take one loser, you're done. So and that's what I try to do every day. Take 2 or 3 trades, make $500, get out of the room, get out of the market, and take my 500 home. So everyone have a great afternoon. I think there's someone after me. I don't want to take their time.